Greetings, market rebels. Let's see here. Welcome to this week's macro measure, combined with, of course, the sector situation as well. And let's make sure that this is working properly. There it is. Let's see. It is Friday, November 8th, 2024, and it's just a few minutes in front of the close here on the East Coast. I'm Wayne, and we're back again this week after my partner Ryan helped me out a few weeks ago when I had a medical issue develop. Anyway, here's our trusty disclaimer, and here is our trusty intellectual property rights notice. And I'm going to do a very brief review, selective review of the prior week's bullets and points. So let's get started with the laser pointer, get right into it, try to keep things moving along. Market behaved. I kept remarking on this in webinars and cocktail hour, and of course in the video as well, that the market was acting like it was no big deal. And in retrospect, the market seems to have nailed the outcome, which explains the resilience in October, if you ask me at this point, and the lack of a VIX surge that I was hoping to utilize to play the VIX hedge for free. Unfortunately, that didn't work out to the greatest extent. Worked out to some extent, but not the extent I was hoping for. And I would say that the market really had this, which I didn't have. As a lot of you know, I was hedging, hoping to be wrong, and turned out to be dead wrong about that. And that's why but I'm staying with my spreads. It's a long story. Anyway, those were smashed, those spreads, but I did have the peace of mind hedge in place. I did not want to take some sort of a hit on the rest of the stuff that I've got. And I did, just like a lot of you, I avoided that smashing, but I'm a little worse for the wear in terms of having to spend the money on the hedge to be able to do that. I'm going to hold, but I'm just going to bypass that discussion. I just am holding, and that's all there is to it. I'm just leaving it at that. Anyway, bottom line, the trend's still up, bulls in control, but breadth in sectors have waned a little, which is a little warningish, but could help bulls. And so in the end, that did help bulls, I think. Right, having that nice little back off that they had towards the very tail end of things brought the market from really overdone on the greed side to a lot more sort of neutral in its complexion. And I think that and the false rising wedge breakdowns, right? So we had rising wedges, we got the false breakdowns in those, which I'll try to remember to show. And I think we always have to remind on that type of stuff, because that's the little wrinkles that help you appreciate the risk if you're holding on to trades, holding on to positions. And I'll try to do that once we get to the charts. But that was, again, important. And essentially what it amounts to is when a pattern breakdown starts to unfold, remember, a lot of people are looking at patterns and a lot of people get drawn in, and that really provides fuel to the gang. So if they get the news they can work with, and they often do, they can really make the other side of that profitable for themselves. And of course, tough stuff, pain for people that held on for too long in retrospect. Anyway, I have to keep reminding that the global easing is synchronizing. We're due for another heavier Ponzi cycle than we have been getting. We have been still really getting a Ponzi cycle to a large degree, because despite everything, the liquidity conditions have been incredible, which typically helps stocks. And with that being the case, right, now we're going to go even more Ponzi, it seems. We'll see. I don't know if that's going to play out that way, but we had rising liquidity, right? We had some of the greatest liquidity during the most recent year, despite the Fed, supposedly tightening conditions. So whatever. At this point, to me, it's almost laughable, but unfortunately it isn't. The kitchen sink support with the election looming again. I think a lot of administrations, nearly all, want the market to be acting well and people to be believing that the economy is doing well and so on and so forth. It's such a big issue for obvious reasons. So that I wonder if that's going to be the case now going forward. Since there does appear to be a change that's going to take place from one administration to another. The immediate term we mentioned last week was that they were assuming that the country and the world were in for smooth sailing, and that the market was set up to have a squeezy melt up type blow off move into year's end because of that and how wonderful the charts look. But they've ran so far so fast. I wonder in the short run if they can maintain that. Now we'll show why we have to still respect both sides. We have a very strong trend, so we don't want to fight this too soon. At the same time, it can carry on for longer than most people think. So we'll try to show that maybe right at the start. So this was probably still relevant. We might have just seen, as I said, too much too soon, or this could just be phase one, or right, we could have an extreme valuation rug pull being the next surprise, since the market really hasn't been surprised in the old traditional sense. It seems like the market has continued to bet mostly in one way, except with the exception of hedge funds, and they keep wanting to move things up. They continue to move things up. They keep getting everything to go their way. So I don't know if that's because people are afraid to tinker with things because things are really precarious in ways they weren't way back when. But that might just be a thought there. But anyway, when things get to be as good as they have been, and everyone thinks they've got it figured out, and it does look too easy, which it's sort of starting to. And there were some utterly ridiculous moves recently on earnings and things like that. You've got to be wary about that. That's my quick take on it. I'm going to now bring up the election fallout, which was, I'm leaving that up there, right? This week's headline, but that really was 0 or 1, right? And we got the 1, where they got what they wanted. And you could see that we, instead of going the other way, right, where it was really going to be potentially ugly on a surprise, because we've been told that investors have been piling into this market now for over a year in anticipation of a Trump victory. That's the story they put out. I can't say it's 100% true, but that's been the theme or the main story they've put out. So maybe they've had it right all along, and we'll see. But I'll go through these, I think, as we discuss things to try to cover them. But I'll just leave them up there for another second. There are some changes, some new things. There's also, some just hitting on certain things I don't want to get away from, just so we address them because we've been running with them for some time. So on that note, I'm going to briefly stop the share. Hopefully you can keep that on the side with a screen cap, or just pause it, take a screen cap, and then I will dump this to get it out of the way. And then hopefully we can come back to that if we have to at the end. But what I'd like to show now are the charts. And I'm going to start out in a share. There's the bell, and here's share screen 4. And so this is a very messy chart of the SPY, and it's back in 2019. And if you recall, right, this was before the COVID. I hope, is it still sharing? I hope it is sharing. I don't know. Something might have been some kind of a hiccup there. I hope everything's still good. Anyway, this was the top in 2020, and it is the SPY, and I'm showing this for a reason. But anyway, this run really kind of started, after in October, and you had this really nearly relentless run, and it was right in front of the COVID madness that unfolded with that really severe drop that we saw into the spring. And so what I wanted to note here is that when these guys kind of have their way with things, break things out towards the end of the year, and there's still time to go, and there really are nearly 2 months, just a little bit less. It's not like they really let their foot off the gas pedal if they can avoid it. I think if they don't get news, right? We said this a while ago too, that this market was really set up to potentially scream if they got what they wanted, and they seem to have gotten what they wanted. So you have to respect the fact that you might think this is overdone, and I would agree with you. In the very short term, I do think it's overdone. Some stocks are certainly ridiculously overdone. There were some incredible UOA hits that we had on earnings plays that some people really like, and those were just becoming utterly ridiculous. With really no choice but to add those to get those in front of folks, because some of the really extreme reactions that we saw. It was certainly worth it, right? If you could get yourself in something, it seemed like you had a greater than typical earnings season chance of getting a very extreme move, and in many cases, folks did. So when you start seeing that happen, right, that's got to play into your weighting system of, do I put a lot of EPS names in there? But you pretty much had to put what you could that was compelling in some way because of that, for that reason. The point of this whole thing, though, starting here, is that these guys can really push something, right? So if you look at from, let's just pick the kind of like low there, maybe in October. The low is about 286 back there in October of 19, and the gang runs the spiders up to 339, right? So what is that? About 55 points. So you're looking at not quite a 20% move from the low. I would say it's a little bit shy of that, right? But you get the idea, right? It would be 58 points rather than 55, I think, really, to get a 20% move. But that's, you're talking about just 3 or 4 months there of time, and you have an entire S&P 500 rise 20%, which is something that would be a stellar year, let alone a stellar quarter plus. So if these guys get really close to this finish line for their bonuses, even if they think they've got things overpriced, in other words, priced for perfection plus, which they may, and I'll show that, they don't really, and they'll ignore everything, even the COVID situation, and just to get things looking wonderful, and have them stay wonderful. That's the way that it typically works, especially at this time of the year into the new year. Usually, right, the best performing times of the year really are kind of like mid-fall into mid-spring, typically. So that's it. You're in that sweet spot. And we even mentioned that on the calendar, seasonality calendar, presidential election calendar, usually where things work well into the new year. So in theory, you really should jam. But I'm just saying, I just want people to note that this could keep going. You might say, well, this is ridiculous. And I would agree with you, as I said, in the short run. But as we've been noting for a long time, the charts kept saying there was a lot of upside potential if these guys kept finding a way, and they kept finding a way, and they have kept finding a way. So to move into where we are now, we don't need 10 years of daily data. So let me just flip this down to like a 6-month chart, so hopefully everyone can see it better. But what I would say now, right, and we backed off from the high today. You're at 69.75 on the closing RSI, so it's safe to say that you were over 70. Once again, I'm not a stickler, so if you get close to overbought, or just around there, I don't think it means anything lethal, right? It just means just keep an eye on it, right? Because it's certainly not early in the party, early in the ball game, and you can see that very clearly visually here with this near vertical jam job post-election, right? So what's interesting about this to me is there's several things, but one of them is that I think the boat was very full. I think this whole trade was overly full, and the only thing I could say is that a lot of professionals were very hedged, and I don't know if just the professional level being hedged helped that, or it was just a case of, well, we've got to let everybody win even when they're in a heavy consensus trade, at some point. Whatever the case may be, somehow maybe the pain trade is still up. I really don't know, but the consensus seemed very full to me, and yet they really had a tremendous week. So there's nothing wrong with that. Just to point out that consensus, when it's that heavily skewed, doesn't always get this kind of stellar performance, but they really did. And kudos to those folks that really wanted to play it that way, and they were rewarded. On the flip side of this, I think you have to be cognizant of the fact that right now you are looking at some RSI readings on some intraday charts of note, right, of gravity, that earlier today were hitting above 80. Now, I've seen things get towards 90 on some 2 hour charts and some half day charts, and they're not there. So it's not really as if this is extreme, extreme, extreme in the short run. It just did get a little frothy, a little toasty, whatever you want to call it. There's no reason to fight it yet, though, right? I really feel like when something's this strong and people think it's ridiculous, and this is the happy hunting grounds for the bulls and the deep pocketed ones at that that can frustrate the living daylights out of people. So if you start picking a fight too soon with these guys, they usually will chop you up and eat you for lunch, right? So you don't really want to do that. I just would reiterate that I think it's going to take a major. Why is Thinkorswim getting this goofy on me? I think it's going to take a major news development to really send this market off the rails. I don't see why it would. Granted, it should probably pull back because of the move we've seen. It shouldn't probably be just straight up all the way till the end of the year, day after day, although you never know, but it shouldn't really be that. Wow, this is just really frustrating the daylights out of me already. I'm kind of getting, all of a sudden, I'm getting over double clicking and stuff like that. And all I'm really trying to do is get everybody in aggressive level. So if you want, I'd probably say, look, just use Thursday's close on the SPY if you're really itching to short this thing, which would be 595.61, roughly speaking. That is the earliest I would consider going up against this thing. If you want to wait for some sort of turn in momentum. As of right now, all we really had today was a little bit of late day profit taking after what's been an incredible week. So I don't really think anything disastrous happened. To get the whole market to really become unhinged, I think it's going to take the news story that just hasn't hit in a very long time. And so that's very interesting to me because usually, just in all the years of trading and so on and so forth, I just am accustomed to seeing every now and then you get some sort of a story that develops. Doesn't often have real staying power, but it can certainly cause momentary hiccups in the market that last for days, maybe a few weeks. And it just seems like we haven't really been getting them with the same frequency. Maybe that all has to do with the fact that there's just liquidity and people are just going to just keep plowing that money into the market regardless, compared to the old days. I really can't say for sure. I'm just kind of thinking out loud. But you can see that there's probably a lot of resistance waiting for this. Some of these lines I had to slightly modify to kind of put them more on target. But right near 600, we think there would be some sort of resistance line type resistance that goes way back. On a bigger picture, it even shows up as well on SPY. Let's see if I can get us to get that type of stuff. Let's get like a weekly, 10-year weekly. And you can see that you're coming in really way back here from 23 after that initial burst. And then you're really working your way up towards here. And there's quite a few things that tell you that you should really stop here, maybe for now, very close to today's high. So I think given the sort of short-term sub-daily overboughtness, I think the bias is clearly still up. The trend is clearly still up. And there's really nothing, they're getting nothing that so far that is really, in my opinion, derailment type news. It could come out of nowhere, which is why I would just keep rolling, right? Especially now that you're basically overbought, right? And you're very close to overbought on the daily as well. So that means you roll a little more aggressively than earlier in the at an earlier stage of this run. But as of right now, I don't see why this whole run would just suddenly get derailed and we were not going to have a reason for it. There would just take some major development to do that. And if you go back a little bit further, and as we've been saying for a while, there's just major upside potential still in this market. And so the next level, really, I know this sounds stupid, but the next level is nearly 7,000 SPY. roughly speaking. I mean, I think that's the natural level that it would go to. I hate to pull round numbers like that. It seems a little overly simplified, but that's where the lines go to. These lines that I think have helped us despite their simplicity. We've been using these. I've been using these now for 30 plus years, and people don't really take them seriously. But then you go back and look at charts, and it's remarkable how these lines end up seemingly mattering. At least they do to me. So I'm sticking with that, and that there's still a lot of upside in this market. We've been saying it for, as I said, for quite a long time. We kind of talked about new all-time highs, I believe, last October, once there was a massive reversal that we saw. And, the nature of how they do it always sort of impresses me, even after all these years. But that they did it. They've done it, and they've continually done it. So you've got to give them that respect. Now, it sounds like just from that isolating that I'm like, oh, I'm super bulled up. I'm not super bulled up. I'm just noting that there's big time potential. I'm more thinking that really you're due for a little bit of a pullback, right? And so where do you come back to? Um, I would say, look, if there's going to be a pullback to kind of convert something into something, and that would be the former highs, if you have a pullback, you're going to probably pull back into the neighborhood of 586, right? So that would be the textbook pullback, back and fill back to there, find support near 586. It can be 586 and change, 587. Close enough is close enough. If it holds there, then starts moving back up again, there's no news derailment. Then you start thinking, okay, let's see if we trend back up, where does that take us, right? And I think you got to think that takes you up into the 605-ish range, right? Which is not that much more, but you have to think about this, right? Have they priced a lot of this in? And I think that's one of the notes that I've got. Do you have, and it is a note that I have, and I'll bring this back here, but do you have this SON? Where did I put the SON? I've got an SON reminder in there somewhere. You probably will spot it before I will, but it was really, the SON is really about sell. Oh, there it is, right? So we got this moonshot, and we got these these major index ETFs have had these moonshots to all new all-time highs, with the exception of IWM. But you have to wonder, right, that do you get the sell on news after an election? There's usually this initial reaction followed by this reflexive opposite, right, reaction. Then things stabilize, and then the end of the year celebratory stuff and markup for bonuses and all that stuff usually takes over. Usually. So, but you have to wonder, right? Did these guys front run too much? And on that note, I may as well bring up this one thing I want to bring up right here, which is this John Hussman thing I came across. And Hussman, this is important to know. This is why I've got it. This is right here. I'm going to try to make this blue. Valuations have pushed to the most speculative extreme in U.S. history. So you may want to keep that in mind, right? This goes back to slightly before the crash of 29, which of course just remains a historical event. So that is worth noting, that you're that extreme, the most extreme you've ever been. I don't want to go into this whole thing. There's other things that I think are worth taking a look at in here, if you'd like to, but this comes from John Hussman, PhD, and he put it out yesterday at 11:21 a.m. So just keep that in mind, because that's, again, no small thing. So that's what I mean about, did they front run this a little too much, and have they pushed it a little too much, and is it just too perfect right now? And when we noted this a few months ago, when things were looking just spectacular, really with very few minor exceptions, I think it was maybe oil and maybe transports. And we were thinking, wow, it doesn't really get better than this very often. And we were kind of nitpicking. And then we did see a pullback. That's what I'm kind of referring to here. So let me get back. Now that we took a look at the charts briefly, let me just take a look at this, make sure I'm not skipping anything. So I don't know what the seasonality calendar, what it brings in terms of value. It didn't. It went off the mark in October. That could have been a tip off, right? So we have to think of it that way. That look, it really veered off, and according to it, we should have good times through the end of the year. But I am still wary of easy credit ripoffs, and I'm going to leave that there. That's it. I'm not even going into details on that. So it is what it is. Please understand that I've got my reasons for not doing that. I'm not trying to be anything clever or one cute or anything like that. I just would rather avoid these discussions. Anyway, my spidey sense is way off the mark. Clearly, I still think there's something. I'm either dead wrong still or way too early. So only time will tell if there's something out there. I still see banking things. I don't know what it is. I still see these people writing stuff about, this is really under the surface. This is bad. No one seems to really care about it, relatively speaking. So I don't know, but I don't know if it breaks through. These other things break through. There's just things out there that it just seems like something could really go wrong, but they're not. And so I don't know if I've felt that way before, and it's happened most of the time. But got to say, this one isn't really happening. Luckily, right? I'm not betting on that to happen. I'm avoiding like, oh, I better position that way because the trend has just been so strong, and it does. Liquidity's been what it's been. It is everything's supportive. Really, we've been saying that too for a while, that everything was always supportive of the market. It would take a real shift in the news dynamics to take the market off course. That just hasn't happened. So, is it priced to perfection? If it is, will we see some profit taking and then rotation? That's something to think about. The charts, of course, look tremendous now, given what's happened this week. I'm wondering if they were polished a little too much. They're a little too shiny. Mention the Husband thing. Again, I'd go look at that if you want to. I still think because of all these things we've discussed, there is complacency that just continues to be out there. These people haven't really experienced any, let's say, market price action hardships in a while. And the market usually sprinkles that stuff in. And it often does that after there's been a massive move where people think everything's really just stellar and going to remain that way. And so it's very curious, and I have that word in here somewhere. It's very curious how that happens, but it's almost like the news in the future is set up that way. I'm not saying it is. I can't prove it. It just seems like that all this incredible news flows and it's supportive of the trend. And then when things get ridiculously overdone, you get this other side of the mountain, and the news sort of supports going lower. Don't know how it always works that way, or should say works that way so often, but it does in my experience. Anyway, as always with events in the rear view, we're going to keep going with the trend, and I showed why you've got to stick with it until it gets near the danger zone that we talked about. And I'll talk about the other major index ETFs as well. But that's the reason for that, is because what we saw in the year end and into the start of 2020, the sectors and market breadth, they dramatically improved. And remember, they were primed. We did mention that right, that they could be set up to help bulls in a very kind of ironic way because of the corrective action we did see in them leading up to the election. And I do think that was a contributing factor because things looked a lot cheaper than they could have without that. And I'm sure a lot of people felt like, well, this is a great buy, whereas they could have maybe thought, it's already too far gone. So that might have helped out. I do think we're short-term overbought. Some of these moves were really stupid in a good way, though. We had some really good things happen in UOA, and for that, I'm always grateful. The day-to-day, just pure earnings speculation is not, our bag. We do include that in what we do, though, because a lot of people are drawn to it. And if they have the time, because they're not evaluating 70 something UOA hits a day and supporting other services, they can delve into research. That's why I passed it along. But I just don't have the time to go into the requisite research about what the earnings reaction is likely to be. It's very hard for me to find that all that time. So I have to just pass it along kind of as it is when I think there's some compelling ingredients. By the way, the put call, we kept waiting for it to do something. It finally did something at the very last moments before the election. The dollar and TNX are a little mixed this week, but they're still way up and they're still pesky. So the consensus rosy to the moon. Consensus was, like I said, was overly full. That was right though. Right in the short run, it was right, and over the past year, that's been right. So again, a trend is a trend is a trend is a trend, and that's a real thing, and it's something that you can continue to go back to, and that's why it's just hard to fight trends. You've got to really embrace them as much as you can, I think, and we try to do that as much as we can in the services. We talked about the megas and SMH having trouble, and we kept saying was that bull spin would be this, bear spin would be that. Well, the bull spin would be the market kept doing it, performing without it. And in retrospect, the bull spin wins. We have to just kind of put that to bed. The market did what it did without them, but now those are primed again. So that's interesting. There's still people that I see that are clamoring that there's a lot of, let's say, bogus stuff going on in SMH land. They continue to grow louder, but the squeeze didn't care. So the thing is that if we do get on the other side of the squeeze and we start seeing some selling come back in, does that argument reemerge and does it continue to be relatively loud? So let me just bring these up now. So we already talked about, likely area of the pullback. That would be like textbook for SPY. But clearly you can see, before I move on from here, you can just see like what can you really say? Is it a little stretched? As we said, it is. And is it extreme for one week straight up? Yes, it is. All that kind of stuff. And could there be a little pullback? Sure. But the trends are all up still. All the SMAs are still up. So let's take a look at the megas, because these have not been really looking all that splendid, right? We know that. And for the longest time, we were wondering, why are these things not doing better? What's holding, what's holding all these things back? When are they going to get on the right track here? So these are some of them. And right now, we have to acknowledge that they did. They got everything back on track. You've got a new all-time high in that whole package, if you will, that whole basket. And it is overbought, as you would expect right now, much like the market, but it did back off from the highest high. And that's what you've got. But those are now participating. They too probably need a little bit of a breather type pullback. But if they hold up and you don't see a breakdown, back into this consolidation that they had, then you have to just, again, I would continue to go with it. And I would point to, I could give you other examples, but I would just keep pointing to that 2019 conclusion into 2020. And Ryan and I were looking at the COVID situation. We were thinking, this seems, early reports, we were like, this really has potential to knock this market for a loop. And for whatever reason, the market didn't care about it, as it often doesn't. It just did not care about the potential for problems there. And we kept wondering, how are these guys going to continue to buy the way that they were, and ignore all this because with the fallout that could develop, but they did. So I don't want to really draw up too much and take too much time, because I know everyone hates the length of these videos, almost everyone anyway. But I just want to point this out, that this is what I'm talking about. We may as well use this chart that we're on right now. This was sort of that rising wedge that we were talking about that can be dangerous. And so note that you started breaking below it, right, just in front of the election. And then they really reversed it. So this is maybe not the best example. Other things, maybe like the diamonds. Let me see if I can get one in the diamonds, maybe, since we have to cover that anyway. Let's see what Thinkorswim does for me here. I don't know where it even put me there. Yeah, so that was an even better breakdown. You could sort of see how the wedge was. Let me just take that. What we'll do is I'll just highlight in blue the lines that I'm talking about. We could, let's just say, use that line on the top side. We'll use this line on the bottom side that I tried to make blue for everyone. Hopefully you can see that. Breakdown in front of it, scare the heck out of everybody below the 50. Remember, a lot of people use the 50 as sort of the demarcation line, whether they want to stay in, they not stay in. So it can trigger sort of a lot of emotional and technical response. And they scared people, and then there's the aftermath. So this is a great way for them to create liquidity and bring in fresh shorts, chase out some longs by violating, right, or penetrating below such a key SMA. It does get folks rattled, and then look, lo and behold, look what happens. Just an incredible rally this week. So that's what you're up against there. That's the little example I'm trying to get to, where it's fine to trade these things, but you got to manage them, right? You can't just say, well, we broke down that whole wedge, everything's falling apart. You've got these events in the form of the Fed this week. Of course, the election was the bigger deal probably this week by far, but you've got to be cognizant of that, obviously. But even just in general, you've got to be on guard when something breaks down and then they start to reverse it, because this is what they do, right? They use these things to their advantage and get a lot of people on wrong footed. Now, right, we are at a just under, because we backed off, just under overbought, right near what we would think would be a resistance area due to our lines. And everything's, overdone, overstretched. You're looking at maybe like a 77 RSI reading on the 2 hour. So again, could get it more overdone. Probably deserves to have a breather of some sort, maybe have a pullback. And I think that would be about, if you're looking for a pullback target, I'd put that at 434 on diamonds. So maybe like 1.5%, I guess, or something like that. Maybe 1 to 1.5%. Not that much. See how it performs once it gets near there. If it does, remember, not to bid directly at 434. Number one, it's a round number. Number two, you don't want to be where the obvious level is. You really want to cheat in front of that a little bit. And by that, I mean, you'd be at like 440.30 or something like that, right? So just keep that in mind. It's been a long week, been really busy. So I'm running out of a little bit of vocal gas here, which should please nearly everyone. But that's that. Can it continue to go? Yes, clearly it can continue to go. We'd have to start doing some projections on that. What I would probably watch out for, though, more than hitting sort of fib extensions right now, would really just be let it breathe if it keeps going there. But, once again, if it gets above this line and it's in the mid 80s, right, on RSI, as it does it, something like that, that's rarefied stuff that you don't see that often, especially out of a major index. And so at the very least, at that point, you'd be looking for a pullback back to this former resistance line, should you get above it. But yeah, this can just keep going. I don't want to go into all those details because the video is already running for a while. And I know that these videos are too long for a lot of people, but here's a line that we can extend just to be respectful of what this thing could do. And thank you, Thinkorswim. I'm so glad Thinkorswim and Zoom are teaming up to make the life a living hell for me again this week, because they often do that. But I think that's an excellent line right there. And that to me is at that's at 465. And that's not even at year's end if you were to hit it. And it wouldn't be a crazy move. So I think 465 to 470 is certainly within reach. And this is just a monthly chart in the next couple of months. Right. So I don't see why it wouldn't be. But yeah, I think that's sort of your kind of, if you want a next level up, that's a bigger level. That's what I would throw at you. And of course, the 434 level on the downside. Let's go to the Qs, and then we'll go to that black sheep IWM, which people are excited about. I get it. And I'm hoping for that to do very well, too, because that'll really mean things are on a great footing. But I'm just concerned that yields are where they are. And I'm not so sure that really helps the IWM, but we'll get to that. While we're here, let's just talk about the potential in the Qs, which is tremendous. The Qs have a lot of upside here. So some people are going to call it a mania. Some people are going to call it, utterly ridiculous and all those things. But I'm just here to tell you that despite what you may think, despite maybe the validity of the arguments that those people would make, and they might have tremendous arguments to make. Now, I'm not saying that people don't. I am certainly not. Come on, think or swim. My gosh, boy, this thing's really giving me a hard time now. All I'm saying is that, right, for it to really get, start to really perform, this thing has a lot of upside for as an important of an index as it is, and that could maybe start confirming the tech, the AI thing again, which a lot of people have problems with. Not even arguing that stuff because we're really more about the charts here. We try to throw some of that in, but I would really defer to the charts and the trend, especially more than any of that kind of thought stuff, um, myself. Anyway, this is really forceful, not really so much on a volume basis, but just look at this weekly candle, really big turnaround, kind of an outside week, if you will, right? Bullish engulfing type thing. And you're at a new all-time high, and you've got a lot of room till your next major resistance level. So I would not rule that out, right? If things break in favor of the bulls. In other words, if you avoid really difficult news shifts, change in the news dynamics, you could really still go a long ways before the charts say you should really run into any trouble. And I think that should really be encouraging. And like I said, we had the that period we talked about in 19 into 20, and these guys can get very relentless and stay that way for a while. I mean, for months. So I know it's already toasty in some ways. I get that, but I'm just saying that don't start thinking they can't do it because they've done it many times already. So that's all I would tell you is I get why people are going to look. There's going to be articles that come out beyond Hussman. There'll be other people talking about extremes, and that's a fair thing, a fair comment. I mean, I believe it is. I shared it too. I do think this is stretched, and you could see some short-term volatility, and there could be a pullback. But I'm just going to say that without the news really shifting it, this is look at this consolidation, the major run. You consolidate, you consolidate, you consolidate. You're kind of undergoing a breakout attempt here in the Qs, and it would be nice if you're someone like me and a lot of people that are older school, just because we're older. You want to see that old style pullback, and then you reaffirm that what was resistance becomes support. I call it converting it to support. Other people have other descriptive phrases for it or whatever terms. But the point is that this is common and it used to happen a lot, and people love it because it sort of makes you feel warm and fuzzy about, well, no, it really is a breakout because it won't break down. And now they're goosing it again. And it works. It used to work a lot better, right, than just the first breakout without doing that. And you just keep going because then you often fell apart and came way back down. So people don't like to see that. They don't like to see, things really tail off and reverse because the continued strength or persistent strength is often seen as good. So in a very short way to put it, it would be ideal if this thing were to back off and at least fill this gap. But if you want an even deeper number, I'd go with 502 on this one. It's right near the former high, just to throw out a number, 503, 502, right in that range. There's a gap fill here from Wednesday into Thursday. That would be a 506 number. That's probably going to be, if you were to slide, you're probably going to slide back and find support on this former support line, right, that we're away from now, which was potentially resistance when we were below it just, earlier this week and late last week. But yeah, there's projections wise, you can see that there's a lot of projections that I've still got here from other times that suggest this thing could go, and we saw that bigger picture go. So it's there. I would just, again, you got to be cautious, I think, in the short run with a 78 2-hour RSI. So this is the delicate sort of where are we answer. We are in a market that's trying to break out, has broken out. We don't know if the breakout has staying power. We don't know if things have priced to perfection. We don't know if it can keep going because it became short-term overbought. And the best thing that bulls could do is allow for a mild pullback, take the overboughtness out of it, take that resistance, convert it to support, start moving it up slowly, and then goose it into year's end like they typically do. That would be the best thing that could happen. Of course, the news would need to cooperate for that, but it often does. As I said, when they've got the bull by the horns, they often get the news they want. And let's face it, the market, the market was right about the election. The argument that we've heard from all the commentators has been the market's front running a Trump victory, whether you like it, you don't like it, you think it's a good thing, a bad thing, whatever. That's what the story has been. And they got what they wanted in theory because they positioned that way. We'll see. Only time will tell if that turns out to be, they get what they wish for. We shall see. Anyway, the IWM we need to cover. So IWM, this is the one we've been trying to wait for, like probably so many others. See, please start getting involved. Please start participating. And I hate the way that it did it. This, as I've maintained for a long time, this is a great trader. Getting involved in IWM as a trading vehicle, if you want to trade a major index, it can be challenging, sure, but it really gives you a lot of bang for the buck quite often with movement. And the options are very liquid and they're very dollar reasonable. So you can really, you can, I think, do very well if if you want to trade a major index ETF like this in IWM. But of course, this is a little crazy. They've got this thing over 80 on the 2-hour RSI. Could it get a little more absurd? Of course it could. Remember, we thought if it got through 225, our next level was 229. Absolutely just disregarded that as if it didn't exist, right? So it's smashed way through there. And it's a lot closer to the 244.45 level we were looking at. That's, I believe, the all-time high than it is even this sort of intermediate level that we were looking at. So that's an incredible move, right? A very powerful move. You go, I guess, from, let's see here. You were it looks like on Tuesday morning, you were at 217.84. So yeah, you went up nearly 10% in a major index. Now, granted, it's small caps, but still, it's a major index ETF, and you get that kind of performance. So just amazing performance. I don't like the way that it did it, but there's no denying the short-term strength there. As an old school guy, that I feel comfortable with is that nice strong move but it's still, let's say, regulated or measured, right? That it gets a strong move, a very strong push, but it sort of does it in a measured way. And that you have a very little give back and then you keep going. That's really what I prefer to see, but you don't always get what you want. Wall Street will rarely give you exactly what you want, but you've got to just take what they're willing to give you and do your best with it. That's what we try to do. Anyway, here's that 244.45 number we were talking about. I mean, that looks clearly that's very attainable, right? That you could just go up another 2 or 3% and be really in that ballpark. I think we were talking about a move to 250 seemed possible based on what we were looking at in the short run. So maybe there's going to be more follow through. I do think more follow through next week would probably take the frustration level from high to extremely high in some camps. People that just think this is insane and has no business happening and all the rest of it. So they might try to do that, right? So we've got to be on guard. I would not rule that out. That's all I can say, because I have a sense that despite the fact that this should back off a little bit, they might only let it back off a little and keep people frustrated. We will see. You just got to mention that, but that's what often happens. That's what they do. If you were looking for a pullback here, gosh, I guess it's 229, right? Like, let's try to get into a ballpark. If they do put a pullback together, 229, but otherwise, I think your next levels up are really going to be an attack on that 244, 245. And then I think we pulled this 250 ourselves, from before. So that is the other major index ETF that we can cover. As far as The sectors. Let's take a look at the sectors. And mostly, right, you could see that most of these sectors really participated to some extent. So some were stellar, like XLI, some XLB, right? XLU did the turn. But if you just look across at these 12 sectors, almost everything really tried by week's end to participate. So it was really, really super strong, a super strong move. Um, that helped out in a lot of places. Market breadth, let's bring that up. And even though it's going to say IWM, it doesn't really matter. I'll just switch it to SPY so there isn't any confusion. But these are not contingent upon the symbol. These basic market breadth measures that I've got on this view. And you can see that, as we said, right, it really was not looking as stellar late last week when we were discussing things. It was looking like we had a good sort of corrective pullback, which could help the bulls out. And I do think it did. And a lot of that ship got righted, right? So they really came back all over again. But I'm giving conflicting stuff because I have to here. I've got to remind everybody about, this is, you got to keep in mind that you could get, after this initial move, that sell on news as well. Right. So, but this obviously looks good. They started improving things. You're getting near resistance line. So you're in a tough spot technically. Um, Something like, let's go back to XLF though, real quickly, because I'll just show you, right, that this is, where is this thing? A very important sector, blah, 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 blah. And they've got XLF. And earlier in the week, they had it, really, really jacked up. But by virtue of the fact that they were able to back this thing off from that high here and then reverse it, right? It's not as bad as you would think. Yes, it's overbought, but it's not anywhere near, say, 80 or 85 or 90, where we've seen things, even sectors, get that way before. So that's why you're in this tough spot where you get this really strong move. And you could say, well, that was all just positioning reflexive. And it could have been options induced as well, the whole thing there. But bottom line is, they, even something that looks pretty crazy isn't really that bad. So you're really in a tough spot where overbought, but not too overbought that you can lean short. Very strong trend that you don't want to lean short against too soon, but not easy to start just being an unabashed bull at the same time. So you're in a tough situation. Do keep in mind though that SMH is not overbought. You might be surprised to learn that despite everything, SMH is not even officially right at 60 at week's close on RSI on the daily. So there's a great example of something that it's now above all the SMAs. Again, it's near the highest high it's put together in months. It wasn't able to even this week close out on that and take it out and close above it. Certainly still has gap fill potential back here, right? But it just keeps working its way up, mainly right with higher lows, right? And maybe potentially higher highs, but it hasn't done it yet. So you could say, well, maybe it's got a double top forming there. Maybe it does, right? So this is just not out of the woods despite everything. I'd still keep your eyes on this because I think it's an important sector. That's why I always talk about it practically every week. And you could say, well, is it falling below support? I would say, look, if it breaks down below Friday's low and you want to trade it, go right ahead, right? But remember, if they start to ramp this thing up, number one, it can really get going. Number two, it has a lot of catch-up potential because think about how it's languished now for really about 4 months while the market has not. So this thing's doing its resting. And if it leaves this consolidation and a breakout, this is going to moonshot, I think, and lead the next leg up in this market. And it's going to help this market on the Qs, especially, go bonkers, if they do squeeze that in. Now, I'm not predicting that. I'm just sort of telling you that this is what I think could be the scenario. I've seen things like that happen before, and you've got to be respectful of it. So let's go back to here. We talked about all that. We talked about all this. Now, this is, I think, your big question is, are you really going to go straight up from here? I don't think you will. I won't rule it out, but I don't think you will. I think you're going to have some sort of a pullback here a little bit, maybe not right away on Monday, maybe not even this upcoming week, but there's got to be some kind of a pullback. um, Most of the time, there are exceptions, right? There's got to be something that happens when you get a little bit this far on sort of a big news event, but there's no guarantees of that, right? And the trends are still up. You're in a really tough thing. So market environment is very tough. I feel like it could be a little too good right now, too soon. I think the potential's there in both directions. You could still get them out, but you really are due or will soon be due for at least a mild pullback. I still am sticking with, I still expect there to be unexpected news, because after you get these incredible moves like we saw at the end of 19 into 20, you then get the COVID thing that was out there that was being ignored, and then they decide they're not going to ignore it anymore. Maybe that's news that set that in motion. Maybe it was the government or what have you doing things they did. But that's what you've got to be ready for, that when the news changes, a lot of this stuff can really fall apart quickly, especially if they gap it up the way that they did, right? They didn't really build a strong sort of stair step on the way up. They kind of just jammed it up right lately. So I would say the world's still full of problems. Those problems have gone away a little, which is why I've got a few minus signs there. So I'm just mentioning that, there were some things that the election seemed to impact in terms of, hey, we want to start a war with this guy, and that guy wants to start a war. It seemed like it helped that. I still think there's a lot out there, but it seemed like it did sort of bring things from, I guess you could say, boil to simmer. It seemed like it a little bit. That was the news I came across anyway. These issues, as I noted, much like the COVID thing, won't matter until they do matter. That's the hard part about being a trader, is that when you let these things really get to you and you just don't stick with the price action, and you think they should matter, and you're probably right, but the market's timing is never really that easy in most cases. Got what they bet on. So the gang got what they bet on for supposedly a year. And that could be right, that where you get the help in terms of expenditure commitments, and could help confidence. And so if this is what the consensus wanted, and they got that consensus outcome, and they banked on the Trump switchover, it could help capital commitments and confidence to do things. And that could help overall, which could take some of that weak economic stuff that we've seen here and there that's really underreported, and maybe stabilize it. So you have to acknowledge that too, as one thing that could help the market, where this isn't just pure sell on news, and they do get a strong sort of end of year thing because they start to see business respond more positively. I'm not predicting that. I'm not cheering it on in terms of the politics. I am hoping that for in general, right, for people. But I'm just saying that that could be a contributing factor, something to think about. I would still be very, very disciplined, just because you are starting next week up stretched. We already know that. And then down, if you really get serious down, I think it's going to be due to news monkey wrenches. The bias is still up clearly, but the cooling period, would typically not be too far off because of where we are on short-term overboughtness. So, as I've been maintaining for a very long time, months and months and months, I still think you have to keep expecting these guys to keep working this trend higher, unless you get news that really doesn't fit the story, right? You get news that really flies in the face of that narrative that they've been spinning. So I haven't seen that. As much as I do keep my eye out, I do think there's concerning things out there. I haven't seen something come front and center that's going to produce that. We talked about this already. So yeah, I think the window of time's still there. I have reasons for that. Not going to go into those. It's not trying to be cute. Just it's better off avoided, is the bottom line. Anyway, the rate drop seems to have decelerated. Rates are back up. That's unfortunate, but that's the truth. Maybe they'll drop back down quickly as well. I don't know, but it could be because there could be a reemergence of inflation. Some people are still making that argument. Some people, I've seen data on that. So be careful as a result. I'm still sticking with a higher DEFCON, only because of the way that they took us up. which we kind of knew, which was the whole point of 0 or 1. It was going to be, hey, this is awesome or this is awful, and it was awesome. So I do think there's economic and financial issues that are out there that have developed. I'm not as worried because we're not there's no news and we're not near like a technical support line or support zone that has me, oh no, this better not break. So, but I still think because of the stretch and the sell on news factor, you've got to be pretty def conny when you're playing the game right now. Um, it can come at any time, but I've been wrong about that. Right. So I've been thinking there's going to be something with some of these sort of things that are percolating in the financial system and other factors like that. And they haven't broken through. So maybe they won't. Maybe I'll be wrong. It's happened before. I'm usually right about these things, like the big picture things. I've usually been right about them well in advance. And the whole key is just not to fight it too soon and position yourself without hurting yourself too soon. But this one so far, luckily, I'm not positioned that way, other than the hedges I had on, which didn't other than giving me peace of mind, didn't help me. But anyway, the point is that I'm still in that camp for whatever that's worth. I guess the other thing I would ask is really that um, does the liquidity that we've gotten from the Treasury, does that still matter? Right? Do we still get that now? Right? Because the switch over on the government theoretically doesn't happen for several months. And does the Treasury continue to support the market the way they have? They very well may. I don't know. Just a question I'm asking. And then will Powell continue to do the same? It doesn't seem like there's really warm and fuzzies between Trump and Powell. So you have to wonder, is there going to be really sort of uh, that kind of situation, right, that's produced the liquidity that we've had now for a while? Is that going to remain intact? And that's a big factor. I mean, I don't think you can underestimate that factor, or you shouldn't. So be careful that way as well. And I am on. That's the final note right there. I think I don't want to go too long here. I don't want to go too deep into the sectors. I mean, it's definitely a good thing. I think you got to keep your eyes out on those megas that are making new all-time highs, and SMH, and the rest of these sectors are generally better and looking good. And so if you're going to get that final push into the end of the year, which you often do, um, this breaking out would be a good sign. So I think you want to see probably SMH above 264. You start getting there, you start thinking, right, they start closing gaps, they start maybe attacking the highest high we've got here. And if this thing gets back on track, a lot of those other things, mega caps, could maybe be joining the party at that point. And then it's really a juggernaut. It's really a juggernaut at that point. Again, without news impacting. So I do hope that something I've shared with you helps you out this week ahead or some week in the future. Sorry that we ran about an hour plus, but it's an interesting time. Thought it was worth mentioning some of these things. Hope I didn't keep everyone for too long. Hope everybody had a great week. I hope you have a great week ahead. I hope everyone has a great weekend if this video gets out early. And thank you as always for tuning in.